Welcome back to Wealthy Mentor Trading, guys. Today is May the 8th, 2022, and today I'm going to be discussing 5 stocks that I'm going to keep my eyes on going into tomorrow, next week. All right, guys? So those 5 names to me are QQQ, tech sector, SMH, semiconductor sector, Oxy, which has had a phenomenal year, raising up 128% year to date. AMC also reporting earnings on Monday, along with Coinbase also reporting earnings on Tuesday. But before we get started, guys, please give this video a thumbs up, share it with your friends, and please subscribe to the channel if you haven't already subscribed. I know a lot of you guys are watching the channel but don't like to subscribe, so please hit that subscribe button. And if you are interested in trading with us at Wealthy Mentor Trading on our Discord channel, we do still have that 2-month $99 promo. So click that link in the description. That should get you started if you are interested in day trading, options trading, swing trading, or if you just want to learn the charts. All right. With that being said, I do have the S&P 500 chart here, guys, and it's ugly. And it was a continued move lower. As I was mentioning to our students at Wealthy Mentor Trading, I was looking for a break lower. And you know what? We did get that. We did have that Fed meeting that was supposed to bring clarity to the markets. They did raise the interest rates. And one of our members asked me if that's a bearish or bullish sign, right? In a sense, raising interest rates is a bearish sign, right? No one wants higher interest rates, but it's also bullish in a sense that it gives clarity to the market. And what we saw during that Fed meeting, post-Fed meeting, we saw a big rally, right? And here we are on the weekly time frame. We touched down to that 41.56 area where I was looking for in an overshoot, pretty much matching these 2 candlesticks on the weekly back on last May 2021. And we did hit that. And the Fed meeting brought some bullish momentum, pushing us all the way to 4,300. But again, we got a rejection and pretty much a reversal the next day when we saw the Nasdaq, the tech sector, drop 5+% along with the semiconductor sector with heavy losses. And right now we did close the week on Friday just above 41.15 support. And to me, I am again looking for a continuation pattern downwards. So 2 things I'm going to look at going into tomorrow is that 41.15 line. If we cannot hold that, we're pretty much going to be testing 40.56. Again, these candlesticks wicks right here, which represented buyers stepping in last time. However, this is a different scenario. The momentum, the outlook of the market is completely changed. So I am going to be looking to see if they step in, and if they don't, we're pretty much going to be breaking that $4,000 support area. I am expecting a bounce at $4,000 as it is psychological support. If not, we could pretty much see another overshoot down to that 39.85 area, and pretty much that was the breakout point leading us higher past 4,000, 4,400, 4,600, and so on. So it is that area from 4,000 to 39.85 where buyers did step in. We did consolidate there for quite a bit. As you guys can see here on the weekly time frame, we got a rejection at 39.85, ultimately finally breaking out, and then we're off to the races. Again, to the downside, this is support now. It was resistance on the way up, so it turns to support. So I am looking at that 4,000 to 39.85 area for a potential bounce and buyers to step in. We are also oversold on the larger time frames, and to me, the biggest time frame that I'm going to be looking at is that weekly time frame, and that holds major significance in the S&P 500 because the last time that was oversold was during the pandemic drop, and we are approaching that area again. And the S&P 500 dropping down to that 4,039.85 area will be awfully close to that oversold condition. So keep your eyes on the S&P 500 at that $4,000 line going into next week. Now to the upside, again, if we do get a rally, what am I looking at? Again, it's that $4,300 line, as we've had 2 major rejections on the weekly time frame. So unless we get above that, there is no hope for any sort of trend change going on, and the trend right now is bearish, so I am looking for bearish targets. All right, guys, so that's my analysis on the S&P 500. I am going to jump into our watch list name, and the first one being the tech sector, QQQ. And this is significant to me because the tech sector was one of the leading sectors last year, and unfortunately it's been one of the weakest sectors this year, right? So we've had a pretty significant pullback, 5% alone on Thursday, which was pretty big, right, guys? You don't get a sector like this pulling back 5% unless there's trouble, there's blood in the water, right? We are down 21.3% for 2022, which is in bear territory, right? It's in that recession territory, correction territory, and it does not look good. And one thing I was looking at was that 316 line. As you guys can see here, we've had that area hold for support back on last May, and unfortunately, we closed below that last week. And those are bear flags, right? Those are bear signals for us to head even lower. Where am I going to look at going into next week? It is that 297.50 area and 288, as it coincides with these two big bounces here, similar to the S&P 500, where we held and buyers stepped in. So I am watching 297.50 with an overshoot down to 288, as it was a slight consolidation area before launching forward and hitting that 338 area. So 297.5 and 288 are areas where we could see buyers step in and receive a bounce, especially with the oversold time frames. So to me, if we do hold those areas, we could pretty much retest 316, and a few scenarios can go from there. We can bounce here and hit 316 and break through, which would be bullish, or we could bounce here, hit 316 and get a rejection and essentially head down lower to that 266 area, which is the next major big line of support on the S&P 500, where it was key back on August 2020. So it's been a long time. So guys, so keep that in mind. We could receive a bounce at that 297, 288 for a push to 316, breakthrough, or a rejection. All right. So to me, by the looks of this chart, I am bearish, and I'm definitely looking at that 297 area for a bounce opportunity. Okay, the next major sector that did have a great year last year, and again, one of the leading sectors that has been bearish, it is the semiconductor sector. SMH is the ticker on this one. As you guys can see, guys, another ugly chart, all pretty much pointing downwards, and it is a sector that has lost 27% year to date. Names like AMD, NVDA, Micron all form this sector, and as you guys know, all of those big names have received analyst downgrades, pretty much cutting their price points in half on some of the names. So to me, what am I looking at? Again, we dropped down below that 237.50 area, which was clear support, and all signs point to that 222.50 to 215 area, where again, it was a key bounce area, right? So it was the breakout point. We came back to test it, and we were off to the races. Again, I'm looking at that 222 for another similar bounce. And if we don't get that, we'll pretty much have that next area of 215 as our last gasp of air. Now, similar to the tech sector, I'm looking for a bounce here for a potential push to that 237.50 area and a breakout for a bullish side, but a rejection on the bearish side for a continuation pattern downwards. As you guys can see from these long wicks right here, it does represent buyer rejection, right? We could not close above 237 on 2 straight weeks. So clearly 237 is an area where the bulls are being rejected consistently. So I definitely need to see that break in order for me to turn my bearish stance into a more of a neutral bullish stance with optimism going forward. So again, keep your eyes on 222.50 and 215.50 for a potential bounce. Once more, major time frames are oversold, so they all go in correlation to each other, right? The S&P 500 going down to 4,000. The tech sector dropping lower. This semiconductor sector dropping down lower, all coincide together because they will reach that oversold territory on the big time frame. So guys, do not miss out on this opportunity. It is a great time to get in, especially at these low prices. As you guys do know, the markets do correct and that they always go higher over time. So if you are someone that is investing in the S&P 500, in the semiconductor sector or the tech sector, this is your chance to get in and cost average your way up. And if you are a trader such as myself and our group members at Wealthy Mentor Trading, these provide significant bounce plays to both sides of the tape, to the upside and to the downside, with great juicy gains, right? So again, if you are interested in trading with us, hit that link in the description. We should get you started. Next name that is significant to me, and it's turning the tide on this one, right? So it's Oxy, OXY. And with this one, we are bullish, right? It is one of those oil stocks, also leading the, what's it called? The energy sector at all-time highs, which is absolutely amazing. It's one of those sectors that has kind of flew through the radar and has been booming, right? So I'm not even going to bother with the weekly chart here. I'm going to go straight to the monthly and give you guys my outlook, right? As you guys can see here, amazing, amazing push on Oxy this year alone, 128%, which is phenomenal. Um, again, it's testing the area where we broke down from at that $64 to $69 area. And we have had a bullish month right now in the month of May, breaking above that $64 area where the past 2 months we had a hard time and we had two rejections. Right now, with the escalation, with the war, the oil prices, the gas pumps, it has been insane. So what am I looking at on an earnings beat? Definitely at that 69 to 72 area retest, which was the last major push down and the biggest bearish candle we've had to date. So on an earnings beat, I am looking for a continued move higher to test those two areas. And on a bomb, I am looking at a retracement to test that $54 area, as we did close from $57 to $54 twice on the monthly time frame. So a pullback down to 57 to 54 is highly plausible. And on a fundamental standpoint, a big one, Warren Buffett, Berkshire Hathaway raised its stake from 11 to 21% via their 13G filing, which is a big bullish stance, right? As you guys know, Warren Buffett did trim his position on Oxy not too long ago, and now he's upping his position. So, guys, this guy is a big whale. Obviously, if he knows something, definitely watch Oxy going into earnings, as the rising tensions and the inflation and whatnot, and the oil energy sector being at all-time highs. Keep your eyes on this name going into earnings. So they are reporting on Tuesday, so watch out for that. Another one of my favorites, right? One of the meme stocks that was a big success last year, and it did bring a big awareness to the market, and that's AMC, right? AMC, they are reporting their earnings on Monday, right after the bell. And to me, I am going to switch over here to the weekly time frame to give you guys a lowdown, right? So again, one of those names that broke down from the ascending triangle, and we have been bearish ever since. It's been a tough year, right? It's been a tough year, and analysts are expecting AMC report a loss of 63 cents per share on revenue of 736 million for the quarter. Even analyst Wedbush has lowered their price target down to $5, maintaining an underperform rating, right? So again, it looks like we are going to miss on earnings, and the analysts are also bearish. So what am I looking at? So guys, big thing right here was that $14.50 line. As you guys can see here, it held multiple times before closing below that on Friday, which was a bearish sign. What am I looking on an earnings bomb? Pretty much I am looking at that $12 line, right? So this $12 line, if you guys look at it, not only was it previous resistance right here, it was previous resistance right here back on August 2019. So it's a big area to hold, right? So previous resistance now on the way down turns into support. So on the bullish side, we could potentially drop down to $12, where two things can happen. $12 can hold momentarily, and then we wick down to $9, where it was the next area of support, or we can hold $12 and it could be a launch point, right? This big, massive candle was at that $12 area. So a few things to look at. Let's just see if the bulls do step in at $12. And if not, pretty much we can get a bear push all the way to $9 on an earnings bomb. So a few things can happen. If we do hold $12, we still have this major resistance area at that $14.50, $17 and $20.50. So at best case scenario, we could definitely see a push all the way to $20, squeezing the shorts, right? and making them close their positions. However, as you guys can see here, multiple candlesticks closing below $20. So it has been an area where it has been resistance. So we could definitely see a push down, up to $20 before getting a rejection, and that is the bullish nature. Now, the bearish nature, as I mentioned, a break below $12, we could pretty much hit that $9 mark where we've had that support back on last year, April and May, which is 1 year ago from today where the big boom happened. All right, guys, another name that is significant to me, and they are reporting earnings on Tuesday as well, and that's Coinbase, right? Coinbase closely correlated to Bitcoin, and as guys know, if you've been watching Bitcoin, it did drop below that $40,000 mark, and even recently this weekend below $35,000. So Coinbase and all the other, crypto names closely correlate. So if Bitcoin is going down, so is Coinbase. And right now we are making all-time lows, right? We blew past, IPO levels, at that 218 level. We've had a nice little consolidation from 218 to 162. Unfortunately, market weakness and Bitcoin dropping has led us all the way down to this $100 psychological line. And, it's another name that has been down 65% from its 2021 peak. Traders, options traders are targeting that 100 to $100 calls on a bearish outlook. So we're at that point right now. So a few things can happen. We can consolidate around this area for quite a bit, then head lower, right? Trend sideways, even on the earnings, or on an earnings beat, we could potentially get a push all the way to 131. And as you guys can see here on the recent weekly chart, actually two candlesticks on back-to-back weeks, we got a rejection at that 131 area again. So on an earnings beat, best case scenario, we hit that 131 area, get a rejection, and then trickle down lower to that $100 area, holding support. Now, these candlesticks on the weekly time frame represent anywhere from a 15 to 20% move. So pretty much if we cannot hold that $100 area, I do have that $80 area, which does coincide with the candlesticks that we've been having, right? That 15 to 20% move downwards. So again, guys, as a trader, as myself, I am watching that $100 mark, right? Anything can be broken. It is a psychological point of support. So if we do see a break above that, I am targeting that $80 area, and I will be instructing students to short that area depending on the volume, depending on their earnings and their guidance moving forward. And also, if we do receive a bounce on Bitcoin itself, it could definitely push Coinbase and move this rally up to that 131 area. But overall, guys, by the looks of this chart, you don't have to be a genius to just look at this, and it is bearish, and we're going to be heading lower until we hit those major oversold time frames where luckily we might see a bounce. All right, guys, so those are 5 stocks I really wanted to harp on. Coinbase earnings on Tuesday, AMC on Monday after the bell, Oxy 128% year to date. Good for you if you've jumped in on that. And the semiconductor sector and the tech sector also show a bearish push lower. So definitely keep your eyes on those key support lines as I mentioned. Thank you for joining us. Please give this video a thumbs up, share it with your friends, and don't forget to subscribe to our Wealthy Mentor Trading on our Discord if you do want to trade with us. All right, guys, thank you so much and good luck for tomorrow.